All right, good day, everyone. And today marks the last day of this week. And actually, we had a lot of significant moves prior to, of course, today. Primarily coming from the Fed interest rates, though we're actually already pricing in the pause, but still. It gave us a kick on the market, but at the same time, we need to check the charts, how the markets have reacted with the recent um, Fed um, Fed news. But before we continue, let's just go to our disclaimer first. So just so that everybody would be informed that foreign exchange and derivatives trading carries a significant risks and it's not actually suitable for all investors. So, before you decide to look for opportunities in the Forex market, I highly suggest that you consider first what are your investment objectives, how is your risk tolerance, um, what are your parameters with regards to your risk tolerance, and also check out your trading experience. Just a reminder that everything that I will say in this presentation must not be construed as a personal advice, and the information in this presentation is prepared without considering your personal objectives, no matter what your financial situation is, your needs. So I advise that you seek advice from an independent financial or tax advisors if you have any questions. So, again, just like what I'm sharing from the past videos, um, everything that I will say, everything that I will share, take it with a grain of salt so that you'd have the opportunity to analyze the market yourself. So everything that I will say, it's based on my experience, based on how I observe the market, and at the same time, based on, of course, my relevant experiences with regards to the market. And FYI, I'm gonna analyze the market based on a technical standpoint. Of course, we're gonna do some fundamentals at the same time, but of course, we'll be heavily relying on what the market is doing in the charts. So let's proceed. Yeah, so I'm just gonna pull up what happened in the dollar last week. So actually last week we already forecasted some scenarios that will happen before the Fed. So we outlined some levels. Our bullish levels are actually the 99.978 level until the 100 and the 100, 163 to 100.7. So if you're able to break out of these numbers or levels, these numbers are not um, random, but these levels are based on volume imbalances that you can see in the chart. So looking at the chart, we have this volume imbalance, the 101.163 to 700, and basing on the 99 point. Let me just go back to that level. The 99.978 level is actually based on the 4-hour fair value gap. So the 4-hour fair value gap is this one. So if you're gonna go to the 4-hour time frame, so this is the fair value gap I'm referring to. So of course, the primary role of this fair value gap is to act bearish, wherein it should go down after being hit, which it did. After hitting this level, it went down, but it's not enough to push the dollar to the downside and went back at that level again, signaling that this level is already invalidated and we're now in a role reversal on that fair value gap. So this happened after the Fed rate pause or the news about the rate policy of the Fed, actually, we're already pricing in that pause. And of course, if you're gonna look at the CME Fed Watch tool, so prior to this, the May calendar or the May target is already on a 96 point plus percent that it's going on a rate pause. So of course you're gonna check also the um, this previous blog. So let me just, yeah, this one. So it's 96.8% that is going on a rate pause. And after the news went out, actually what happened in the market is it went straight up. So what are the possible reasons that the dollar went to the upside instead of going down, despite that a pause is actually a, dovish perspective when it comes to um, the dollar. So what happened last Thursday is, based on how I analyze it, on how I see it, despite being dovish, it actually gave room for more upside for the dollar, knowing that we have an imminent rate cuts coming this year. So if the premise is um, we're gonna have a rate cut maybe in the third quarter this year, probably this rate pause would be a breathing room or a breather for the dollar bulls to have a last push before the rate cut begins. Another thing is what makes this bullish is um, the Fed isn't fast enough to rate cuts, comparing with the Bank of England and the other central banks. So with regards to using the interest rates differentials, actually the dollar is much better. Like for example, comparing to the BOE, we had an interest cut rate cut last Thursday also in the evening, and we're down like 4.25%, a cut of 25 basis points. So if the case is the Fed has a higher interest rates compared to the pound, the dollar would of course gain more traction, or it's more attractive than its counterparts in the UK. So if you're gonna invest, of course, you're gonna look for um, assets that has a higher interest rate yield. So in this case, the Fed has a higher interest rate compared to BOE. So those are the things that we're looking at. Another is, of course, there are efforts in the tariff space that the US is willing to um, do talks with other countries, and this would actually boost the US economy since um, the US is not, I mean, closing its doors to communicate with the other nations, encouraging growth for both parts. So, despite the tariffs, we still have improvements for the dollar. But at the same time, we cannot disregard the fact that overall, if you're gonna look at the charts of the DXY, it's still overall on a downtrend move. But I'm not saying that despite the dollar is going on a downtrend, uh, it would not go on a reversal. But right now, what we're seeing on the technical charts, if you're gonna compare this high and this low, we actually have the same pattern um, of reversal. So looking at this high, the dollar took out this high, and had its final push at this level. After that, the dollar broke down at this level, triggering a trend shift, meaning previously it was on an uptrend, and now after price broke down at that level, um, it triggered as a downside move. And if you're gonna invert this chart, almost the same. Um, it's they all have an almost the same pattern, but on an inversion side. So the dollar broke out of this previous resistance, and at the same time, um, this volume imbalance is being tested again. So the original role of this imbalance is to react bearishly after tapping this level. But since price went back again at that level, this tells us that the role is being tested again if it indeed would be a resistance again. But looking at this, multiple times it has been tested, um, telling us that this level is not going to hold any much longer. But we don't know since based on this previous candle, the candle yesterday, it's not yet fully invalidating this level. So we'd know if the dollar is willing to go to the upside if it would indeed invalidate that fair value gap by trading above it. So yeah, that's it with that fair value gap. And at the same time, of course, we need to map out scenarios that would make it bearish. So for me, if we're gonna look at this fair value gap on the 4-hour time frame, if price trades through at a level, breaks down the lows and this lows and this lows, we might see a bearish continuation for the dollar. But at the same time, we're gonna expect um, a red folder next week, which is the CPI. So what are we gonna expect on CPI next week? Let me just pull up the economic calendar for you. So let's change the date to next week and filter this out with United States. So by the way, still don't have any economic calendar, you can actually go to this website, finlogics.com, and just hover your cursor at the tools and click the economic calendar. So next week we're gonna expect more red folders, specifically with emphasis on the US or the inflation rate. So on a month-on-month basis, the inflation rate is being forecasted as higher than the previous. And of course, looking at the year-on-year, which analyzing the inflation rate based on comparing it what happened from the past months this year, it is being forecasted higher of 0.2%. So that would be like, of course, 2.6% higher than the previous. So if the inflation rate um, elevates, or the forecast is what we're gonna expect, or maybe it's much more higher than the forecast, we might see the dollar to keep pushing to the upside. So this would be a catalyst for a bullish upside for the dollar, since a higher inflation rate means that the probability of rate cutting rates would be lower, since to battle inflation, we need to, of course, adjust the rates by elevating it from the previous, not just raising rates, but of course, um, giving more room for the Fed to take a pause for the market. I mean, for the interest rates. So if indeed we have a positive print, a higher inflation rate for next week, we might see that the dollar would be in a continued pause for the coming months. So we don't know if how many rate cuts are we gonna expect this year, knowing that the inflation is spiking up. So another thing is, I actually mentioned this um, previously, I think last month or 2 months ago, that the Fed Bostic is looking for one rate cut for this year. But of course, that's his opinion. We're still, like the Fed, highly data dependent. So if the data tells us that the inflation um, status is still past beyond the Fed's target of 2%, we might see the Fed continue on a rate pause stance. So, but overall, if the inflation is being tamed right now or is being controlled, we might see the dollar, of course, pushing back to the downside. I mean, pulling back to the downside. So right now, if we're gonna look at the technical charts, we're still looking bullish with the dollar. And the best approach for this one is to look for confirmation that it's still willing to go to the upside. So looking at the lower time frames, we already broke out of this level. What we want to happen is if we are bullish with the dollar, we'd want this fair value gap resting at this level to hold, and we might see bullish reaction on that level. So as long as the dollar is still above this level, and we're not trading to and through at this level, we might see a continued push to the upside. But of course, um, our bias must be flexible. We also need to look for bearish opportunities with the dollar, since the price will show us if it's willing to go to the upside or the downside. So right now, that's what's happening with the dollar. So of course, if the dollar is on a bullish side, we're looking for shorts with regards to the majors. So looking at Australian dollar, right now, the Australian dollar is pulling back after spiking up to this to the upside, taking out this high. But after 2 to 3 days, it was short-lived. And looking at the lower time frames, we already broke down at this level. So if the case is the price took out this high, then went straight down, maybe taking out the orders at this level, sweeping the high, and invalidating this bullish swing low, we might see a further downside for the Australian dollar until this level. So unless we break this level, we're still gonna see a bullish move for the Australian dollar. But looking at this one is I'm not seeing any signs of recovery yet after this push down. So if we're gonna look for a bullish opportunities with the Australian dollar, we'd like to see a weakness on the dollar, and at the same time a bullish sequence for the Australian dollar. So right now we're still on a continued downside move with the Australian dollar. So let's see how the Australian dollar is gonna perform if it reaches this level. Actually, that's the previous support, and now we don't know if it's gonna uh, still support the Australian dollar if it goes down to that level. But I think the inflation rate or the CPI next week would play a big role, a high impact role on the Australian dollar if it's still be willing to go to the upside or the downside. So let's see what's gonna happen with the Australian dollar. But before that, let's check out if we have any red folders for the coming week. So for the coming week, actually we have the consumer confidence change. So let's see what the prints will be next week. But I'm actually not looking at this red folders. I mean, I'm not focusing on this red folders, but my primary focus for next week is the inflation rate. So yeah, so let's wait for the inflation rate for next week for the Australian dollar. And actually, we can look at the the New Zealand dollar also. So looking at the New Zealand dollar, um, compared to the Australian dollar, the New Zealand dollar did not make any much of improvement to the upside since it failed to to break through at that level. And right now, the New Zealand dollar is testing this low. This is a significant low since um, this price movement came from this low. So if indeed this three candle moves is showing us strength, New Zealand dollar must not, of course, go back to this level again. But looking at this one, this three candle move was quickly invalidated by this candle. It engulfed the previous candle, signaling that despite a bullish strength for the New Zealand dollar, the sellers or the bears overwhelm the previous, of course, buyers or the participants, bullish participants. So that's the concept of using or looking at engulfing candles. They are not there for the reason that it just engulfed the candle, but the reason behind that is price engulfed the candle because it invalidated the bullish momentum from the previous candles, signaling that despite the strength of the bulls, still the bears are dominating or have the dominance over the bears at this price action. So right now, the low is being tested. So looking at the lower time frames, we still don't have any signs of recovery or an upside push. If we're gonna look for a bullish stance for New Zealand dollar, we'd like to see a weaker dollar, of course, US dollar, and we'd like to see a bullish sequence with the New Zealand dollar. So what do I mean by bullish sequence? We want to look for, or what we want to see a higher highs and higher lows being formed to show us that the New Zealand dollar is willing to go to the upside, or there is a new or a renewed demand for the New Zealand dollar. So for now, if we're gonna look at the if we're gonna look for um, I mean we're gonna choose between Australian dollar and New Zealand what to trade between them. If the premise is a dollar is going on an upside, meaning it's gaining strength. Of course, we'd like to look for shorts between AUD and NZD. So now the dilemma is what is the better trade for a short between this one? So of course, we'd like to short or pull down the currency that has a weaker price action compared to the other. And how are we gonna do that? We can combine the two currencies, AUD. I mean, I don't need to write this anymore since it's already visually obvious on this one. So, looking at AUD NZD, we're seeing that AUD is gaining strength over NZD. That's why it's going up. So the better trade for shorts is, of course, NZD because it's weaker versus the Australian dollar. So if you're going to compare Australian dollar versus New Zealand dollar, a much more favorable shorts is obviously the New Zealand dollar. So if you're going to short, um, the better trade for this one is New Zealand dollar unless we see a shift from the Australian dollar and New Zealand dollar pair that this pair is going on to the downside. With regards to the euro, let's go to the actually before the euro, let's check first the Japanese yen before I forget. The Japanese yen has been struggling to go to the upside despite it being considered as somehow a safe haven currency also like the Swiss franc and gold. So looking at the Japanese yen, it's not looking good. So it's been struggling to trade to the upside since April, and at the start of May, it actually broke down at this level. So if we're gonna look for more downside, or we're gonna expect or anticipate a bearish um, perspective or a bearish environment for the Japanese yen, we'd like to see the Japanese yen to um, trade breakdown at this level, this previous low, and ultimately below this level, sitting at the 745 level. So if we fail to hold those levels and we finally break down, we might see continued bearish stance with the Japanese yen. So how would the USD JPY respond to this? So looking at the USD JPY, knowing that the dollar is gaining traction, the Japanese yen is going on a downside. If you're gonna look at the USD JPY, we're seeing that the USD JPY is now on a bullish sequence, meaning it's now creating new highs, new lows, and we don't know. We might see the USD JPY to reach this level. If the strength is being sustained, we might see it go to this level. So let me just mark this out for you. This one and this one. So prior to the upside move, the USD JPY actually um, swept this low, probably taking out the orders below that level, and invalidated this bearish fair value gap. So for more informations, what are fair value gaps and how can you use it in your trading, you can check out my market education. So go to the acy.com and look for the SMC part 2. So let me just check it out for you so you would know. Um, this one, part 2. So I discussed here the internal range liquidity, which are the fair value gaps. We also have some order blocks and the external range liquidity, and how can you use it as an entry level for your of course the markets that you're trading. So check out this blog that I have created and see how you can utilize this for your entry techniques for the markets you are currently participating with. So check out that blog, and let's go back to the charts. So looking at the chart, previously this was a bearish fair value gap, this one, and it was quickly invalidated after two candles. Actually, just one candle. It pushed through, invalidating this the role of this volume imbalance to act as a resistance, but it did not hold. And after breaking out of that level, since we're seeing a demand or a strong push from the bulls, price actually left a bullish fair value gap. So after the price invalidated this bearish fair value gap and created a new fair value gap in favor of the bulls, price went back at that level. So if you're gonna look at this one, we tapped on a two confluences, the previous bearish fair value gap and now acting as a support, and now we created a bullish fair value gap. So these two can act as your confluence for entry, and your stops can be you can just place your stops behind this level, so where the liquidity has been taken out. So after that, after reaching this level, we also created another fair value gap at that level. Well, it broke down below the fair value gap, but still, this is still a good entry with your stops just behind this level. So this fair value gap is still valid until the last candle where it created the fair value gap gets taken down. So right now, we have another fair value gap being created at this level. So let's see if this one holds and go to the upside. So that's it with USDJPY. And let's go back to the Western side, the Euro. And yes, knowing that the dollar is gaining traction right now, the Euro is actually not performing well. And I already outlined this in my previous technical outlook that was posted yesterday. So if you're gonna look at my market analysis blog yesterday, this one, the technical analysis. Before I continue, you can check out my technical analysis blogs on a weekly basis because I outline levels there where price would potentially react or trade to and through for this week. And I'm going to outline bullish and bearish scenarios because we don't want to stick on one bias. Like if the market, we believe that the market is on a bullish environment, yet price is not showing us or it's not willing to go to that bias we have in mind. We need to be flexible on how we can adjust and how we can be flexible on looking for opportunities um, inversely from our previous bias. So looking at euro, so I already outlined the scenarios for this one. So actually looking at euro, I'm not convinced that it's willing to go to the upside right now, since euro is trading below the equilibrium, meaning the 50% of the whole range. So why am I using the 50% range as a baseline of strength? Because looking at the price range at this level, this was the previous resistance, support, and this was the resistance. So if the case is above 50%, we're seeing a premium level or an increased strength. We might see those euro to go to the upside. But looking at this level or at this price range, euro has been struggling and trading below the 50% of the range, showing us that the buyers are being overwhelmed by the sellers. So if that's the case, euro is failing to trade at this level, and primarily or since the start of May, Actually, not just the start of May, but by the end of April, euro is already trading at this level. This would look um, weak for the euro, and of course, bullish for the dollar. And this is what happened afterwards. It broke down at that level, signaling that the sellers are now in control of this price range. So if indeed the dollar continues to gain strength, continues to go to the upside, we might see the euro to go a much more deeper level, maybe until this previous bearish candle that was invalidated. So let's see what will happen in the coming days or next week, and the CPI will play a big role of of course, euros direction for this week. So that's my scenario for this one. I'd like to see a more downside move for euro until this level. So we don't know if the dollar would continue to gain its strength, but let's see. Our role as traders is to respond what the market is um, currently offering us. We don't want to, of course, stick to our own bias without being flexible. So let's go with the pound. Looking at pound is actually holding nicely compared to euro, and as it has not broken down yet at the support level. So let's look at the lower time frames. Right now, the support level is still being tested. So we want to see a breakout of this fair value gap resting at that level if we're gonna see a renewed strength for the pound. So again, the dollar is playing a big role for the pound to stall, and we still want to see big catalyst, mainly the CPI for next week. So looking at the euro pound, it's also obvious that the euro pound is on a bearish note, meaning the pound is gaining traction, more traction over the euro. So if you're gonna look for shorts, the better trade for shorts is euro compared to pound. See? See the difference? If you're gonna use the what I, what I call the triad filtration, using three currencies to know what's the better trade. So if you want to learn more about how you can choose a better trade, you can go to my blog, my previous blog about currency filtration. So go again to our website, just click education and filter it to my name, and look for currency pair selection. How to choose the best major currency pair for trading, and how you can maximize just one pair to trade, and you don't need to trade all of it at the same time. You just need to trade a pair or a currency with high probability over the other. So you can check this out and just read through with it, and I already created instructions how you can do it. So that's it with euro and pound. And let's go to USD CAD. So right now, USD CAD, um, it actually went on a slow move on this one. It did not create any significant move to the downside, because how can we say that? If you're gonna look at the candles, it has a lot of wicks. It has a lot of upticks and downticks, signaling that it does not have any signs of momentum on either side. So looking at these two candles, we're seeing developments on a bullish side, favoring the dollar, US dollar. And if these two candles holds by not by price not invalidating it, by trading below it, we might see a further push up for USD CAD. So we might see reactions at this level and this one until this previous high. So watch for these levels that price might react. As of now, what we're seeing with USD CAD, we're seeing traction on in favor of the US dollar. And looking at Swiss, if you're gonna look at Swiss, um, it has more obvious bullish sequence compared to the USD CAD. So looking at USD Swiss or the Swissy, we're in an obvious bullish sequence with new highs at that level. And looking at this one, it swept the low before it took um, before after sweeping that low, it took the highs, this high, and is currently testing this fair value gap at that level. So again, looking at this fair value gap, we have a bullish fair value gap at that level that is currently holding. So if indeed we're seeing strength with USD Swiss, or I mean USD over the Swissy, this fair value gap must hold, and we must see a breakout closing above that level. So, and ultimately invalidating this level by breaking through at that fair value gap. So looking at the CAD Swiss, um, it's obvious that the CAD is has more traction versus the Swiss because the CAD Swiss is going on an upside. So if you're gonna compare again the USD CAD and the USD Swiss, it's easier to push USD over CAD and Swiss with Swiss. So it's easier to push USD with a quote currency of Swiss compared to the CAD. So right now, what we're waiting for is a breakout of the USD Swiss. So let's see what will happen in the coming days. So next up is gold. Everyone's watching this gold, and um, right now, let me just refresh this drawings with gold. So gold actually pulled back hard for this one. And what I'm seeing with gold, why gold pulled back um, with a strong momentum. One reason is actually the tariffs are coming down from the past weeks because the US has opened its doors with talks with other countries. And at the same time, the markets are on a risk on sentiment, wherein the risk on assets like the Australian dollar, New Zealand dollar, Japanese yen are on an upside move. This would, of course, make gold an attractive since holding gold does not um, yield interests. So, meaning if you're gonna hold gold, it will not give you any interest with holding it. And since we're now in a renewed um, fears in the market, gold is right now appreciating. But of course, that's just a fundamental narrative with regards to gold. But if you're gonna look at um, gold, it actually tested the support level, then swept the low or swept the low and created a bullish sequence below that low, signaling that is not willing to go to the downside, but is actually just taking out orders below this level. So another thing why gold pushed to the downside is probably profit taking from institutions and other large participants in the market. So right now, what we're seeing with gold is currently testing this fair value gap, and let's see if this fair value gap on a 4-hour time frame is gonna hold, and and at the same time, this one we need to invalidate this bearish fair value gap for us to see a renewed strength for gold. So the scenario for this one is if we're gonna look for a bullish side, we need to invalidate this level by trading above it. And of course, we need to have a follow through, a bullish follow through after price breaks out at that level. But if we're gonna look for, again, if we're still bearish with gold, we'd like to see this fair value gap to be not traded to through. We want to look for a respect at that level and a resistance until it breaks down at that level. But right now, what I'm seeing with gold is this would be um, highly unlikely to go to the downside. We don't know, but what I'm seeing with gold, looking at the daily, we're still gaining traction with gold. Actually, we have a bearish fair value gap at that level that should up, supposed to act as a resistance, but it failed to act based on that current based on his previous role. And right now, um, gold pushed up and currently testing also the daily fair value gap. So if indeed we're looking for strength or gold is still seen as strong, we want to see this daily fair value gap. I mean the bearish daily fair value gap to support price, and we also have a daily fair value gap at that level, a bullish fair value gap. So that's it with gold, and I'm seeing more strength with gold right now. And of course, forecasts from analysts like Citibank, Morgan Stanley, JP Morgan, I mean, like the Bank of America, we're looking for more upside with gold with targets at 3,700 level per ounce. So let's see if we're gonna break um, gold. I mean, if we're gonna break this 3,500 level for more upside. And lastly, let's take brief look at the US markets. So right now, the US markets are actually gaining traction, and rate pause is good. Um, I mean, it's better to have rate cuts for for the stock market, since it would allow flexibility for companies to borrow from institutions with a lower rates. So right now, what we're seeing with the Dow, we're in an obvious upside after breaking out at a level, and this previous resistance, this level, has now acted as a support. If indeed we're gaining traction over the US market and recovery is still increasing, we would like to see a push up until this high. The same is true with Nasdaq and US S&P 500. They are almost the same since they are correlated. We'd like to see a breakout at that high with S&P 500 and also with Nasdaq until we reach this level. So overall, what we're seeing in the markets is we're seeing somehow recovery or stabilization of the markets, and we're looking for more upside with the stock market. And I don't know with dollar, but what I'm seeing with dollar is on a technical standpoint is looking bullish. But of course, um, we need to be aware if the dollar would show us a bearish signs. We'd only see a bearish sign if the dollar is now willing to go to the downside if we're seeing a bearish sequence. If it's failing to create more highs to go to the upside. So just a final advice, a final note for everyone who's watching right now. Um, yes, there are markets are obviously turning into some direction, going in a certain direction, but I highly suggest that um, whatever strategy that you're using right now, whatever approach that you're using in your trading journey, still being flexible is something that we always need to consider. Be flexible in the markets, learn to um, adjust if your bias is wrong, learn to accept the fact that despite you creating biases, despite you creating plans for the market, you need to learn how to adjust in the markets. The reason for that is we need to manage our risks. So we need to, of course, adjust accordingly. We don't know how long the market will go to a certain direction. We don't know um, where the market will, when or where the market will go to. But our role as a trader is to adjust accordingly our risk, how we use our strategies, and at the same time accepting the fact that most often time we are wrong and how we're gonna approach the markets because the markets will always be right regardless of what you have prepared prior to your trading day. So for more analysis, you can check out our website. Again, just go to acy.com. Go to acy.com, hover your cursor to the Learn tab. Actually, you can just click any of this, like the market analysis. So we post timely contents for you to read, and of course, for you to um, check our perspective on how we're gonna approach the market in the coming days and the coming weeks. Also, check out my blogs, not just my blogs, but all the blogs of our analysts. So we upload timely um, blogs for your, of course, for your education. So watch out because I'm gonna upload another blog about how you're gonna trade gold, and I'm gonna outline a strategy that you can use, how you can execute it in the markets, of course, using technical analysis. So again, everything that I have said in this webinar, in this video, take it with a grain of salt. I highly suggest you check out the charts, check out the markets, what the market is doing, and analyze it if it's aligning, if the market is aligning or the current direction of the market is aligning with your strategy. So before we end, I highly suggest and encourage everyone to like, share, and subscribe to our channel so that you'd be informed of the coming videos in the next coming days or the next coming weeks. So again, this is Jasper, your market analyst for ACY.com, and I'll see you on the next video. Take care, take care, everyone.